All right, well, welcome to Stock Market Review for our yummy subscribers and all those on YouTube, LinkedIn, and also on Facebook. Great to have everybody here. All right, so this will be recorded as well, so you can always come back and look at the recording. And if you have any issues with the volume or audio of any type or the visuals, let me know in the comments area. All right, let me dive in here. I got a few administrational items to cover here. And of course, this is the first stock market review we're actually doing live. So this is kind of cool, and we're going to refine it and make it even better as the days go on. All right, so first thing to cover, of course, are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really do go hand in hand. We want you to be aware of the risks and protect yourself as best as possible against those risks. And to start, please always trade with money you can afford to risk, called risk capital. And then secondly, know how to calculate your trade size on each and every trade or investment you make. And that's really important. And I got a couple of books on how to do that as well. And then finally, run any of our ideas. We may look at stocks. I may recommend a stock here. Run those by your financial advisor to be sure they're suitable for you. I don't know your personal situation. Of course, they do. So that would be a good person to make sure they're suitable. All right. And also books. Okay. So we've got Money Management for Traders, Traders Money Management System, that deal more in risk control. So those are books that really, whether you're an active trader or an investor, those books are outstanding for increasing your risk control. And then, of course, I've got Elliott Wave Techniques Simplified and The Art of Trading, second edition, coming out. That's my new book coming out this year. All right, let's take a look. So the big announcement today, of course, is the FOMC. All right, I think the FOMC is going to remain flat. I don't think they're going to increase rates, decrease rates. I think they're pretty much going to be flat, and they may start decreasing a little bit later in the year. You know, this is an election year, so they're going to want to make the economy look as good as possible for the sitting president. So, you know, be prepared for that. And I would imagine rates will come down at some point later on this year. All right, so NBA mortgage apps come out at 7 a.m. Eastern time. By the way, I use Econo Day for the report here in front of you. It's a great service. You may want to check that out on your own. All right, so we got mortgage apps coming out. We got ADP employment report coming out, Treasury refunding announcement coming out, bunch of bill and bond and note announcements coming out. Chicago PMI coming out, FOMC announcement, like I said, at 2 o'clock Eastern time, Fed chair press conference, and farm prices at 3. All right, Thursday, February 1st, we got jobless claims, productivity costs, PMI manufacturing, construction spending, EIA, natural gas report, Fed balance sheet. Friday, we end the week on February 2nd with motor vehicle sales, employment situation, consumer sentiment, factory orders, and the Baker Hughes weekly rig count. All right, so audio okay, everybody? You can hear me okay? I assume that's going okay. All right, good. All right, so when we look at charts, we're going to be using software that is proprietary to TradersCoach.com and AppliedRealityTrading.com. And we have charting software, we have scanners, and we have risk control software. You can read more about that on our website. All right, so let's jump in to see how the markets were doing. So every Sunday for my yummy subscribers, I create the upcoming week's chart. And this is the daily Dow Jones Industrial Average chart. And we're going to look at the current chart as well in just a moment. But in terms of what I've marked on here, some forms of technical analysis, I put the Elliott wave, so Elliott wave 3, 4, and 5. Elliott wave basically says there are 5 waves in a trend, the 5th wave being the last one. So we're kind of working our way up to that last wave 5 target zone. Once we get there, then we got to be really diligent, because then we can expect a major sell-off. Might not get there for a while. All right, we could have a little bit of a pullback here for profit taking, which I think will probably happen at some point, and then another surge forward. We may not get to that wave 5 target zone until the end of the year, or at least the latter half of the year. It all depends how fast things move along. So I think you're probably okay for the remainder of this year for the most part with some of your long positions. But when we get to that target zone, you do want to be careful. So that's kind of the situation here. This wave 5, for those Elliott wave people, that will be a wave 3 target zone for the weekly chart. So that will be a long-term wave 3, which means that you're going to have a long-term wave 4. Now in 2023, we had thought we were going to be in that long-term wave 4, but the market took out the high in December again, the 2022 high. And so that extended that particular sequence. So now we're looking at a wave 5. So unfortunately, it doesn't get rid of the long-term correction. It simply delays it. And that's kind of where we're at now. So we can expect a big correction at some point, but probably not till the end of this year when it will start. I don't think the correction will really kick in probably now until next year. All right, so that's kind of where we are now. Short term, I wouldn't be surprised if the markets take a pause here at some point. May go a little bit higher. It's creeping higher a little bit, but it's kind of getting toppy. You can see this formation here where, you know, it's a little bit higher, less hook up. So we could get some profit taking. And I would anticipate if that happens, the profit taking pullback area at this point is around 36,544 down to 35,505. And if this creeps up a little bit more, we'll have to redraw that again, and then that will move the target zone up. So I think it's coming, but I don't think it's going to be that big a deal, but it could last a couple of weeks to a month or so forth. All right, so that's kind of where we're at now. We're seeing a little bearish divergence in our OWL indicator down here that we see when we get near a top. So I think it's probably around the corner at this point. All right, so if we look at the S&P, and this is kind of an interesting point here. The S&P actually took out its high recently, and that high, of course, was the 2022 high as well. But what was interesting about this, normally the S&P leads the Dow, and in this case, it did not. So that always kind of, markets are always throwing little things at us like that. But in this case here, I'm kind of anticipating we'll probably get up to a pretty significant target on the S&P as well, just like in the Dow. So my target on the S&P 500, probably around 5,652 up to 6,998. And again, probably occurring maybe later in the year. Now, what's also interesting is here we are coming to the close of January. And you know how January goes, there's a saying in the markets, how January goes, the rest of the year will go. Well, January is looking pretty good right now. And so that means we'll probably, statistically, that means that we'll probably have a pretty good year in the markets. It doesn't always happen, but statistically it does. And if that's the case, then we can anticipate probably a pretty good year. And that's why I'm kind of thinking we won't get to that target zone until the end of the year, which will mean a bullish year overall. So that's kind of where I'm coming out with that. If we look here at the NASDAQ market here, you know, we're approaching another major high. If you look on the chart on the far right here, we still got to break above here, but we're probably going to have a little bit of a pullback here as well. So I would anticipate NASDAQ, S&P 500, and the Dow pulling back for some short-term profit taking at any time. So just kind of be aware about that. So it looks like it could happen at some point. All right, so the next thing I wanted to take a look at is switch gears here, and once again review the housing market a little bit. Housing is very local for one thing. All right, so what I say may not be exactly what's occurring in your neck of the woods, but overall, what we kind of take a look at to get an idea of the housing market is we take a look at the Case-Shiller Index. And the Case-Shiller Index basically is the average prices of homes here in the United States. He has a index for the UK as well. But what we're looking at here is the US. And then we also take a look at the CPI, which measures inflation. So the CPI is this line down here at the bottom. And the Case-Shiller is this particular line up here. And the bottom line is whenever the Case-Shiller or home prices get extenuated away from the CPI, you usually have some form of a bubble, and markets eventually topple and pull back and get in line with where they should be in terms of the CPI. And housing, as you know, goes up with inflation, so it keeps up with inflation. But whenever it gets dramatically away from inflation, that usually is a sign that we are in a bubble. And so what I kind of want to do is show you, this was the 2008 financial crisis. And you could see how extenuated the bubble was here. Well, look where we are now, almost double that. And so that is another situation here where we're probably due for a correction at some point in the housing market. Now, when exactly that will happen, hard to say. Maybe it'll happen later in the year when the market's correct. But you know, you can remain in a bubble for quite some time too. So we could be up here for a while. We have already, but it's not a matter of if, it's more a matter of when. So at some particular point, that's got to correct and come back more in line. So what's also interesting about this, notice we've had the increase in inflation represented by the CPI down here, but this also branched back up here. So that more than made up for the increase of inflation. So we're still at the same amount of bubble here that we were back in here. So that's kind of an interesting chart. And if you believe that in history that things eventually pull back to their norms, then you got to be careful here. All right, the next chart I want to show you, which is kind of a cool chart as well, is one where we focus on incomes. And let me just get this one up a little higher here. So this is home prices versus incomes. And this is done by a company called RE Venture Consulting. And this is kind of a neat little graph as well. Now, this was updated over the summer of 2023, so they'll probably update this again pretty soon. But as of then, home prices were up 31% over value compared to income levels in America. And the way you read this chart is basically wherever it gets red and darker red, you have more of a bubble. So you can certainly see in this area here that we are pretty extenuated away from average incomes. Now, what's interesting here too is we've had another move back up, which has made it even higher away from incomes, because the incomes have not come up as much as housing has over the last 6 months or so. So kind of interesting chart here. Both of the charts, both the Case-Shiller versus the CPI and home prices versus incomes, are both indicating that we are in a bubble area on the markets. And again, we can remain bubbled for a while, but eventually things have to perk down back to its norms. All right, so that is the real estate market, and it'd be very interesting if anybody has some information on what's going on in your neck of the woods. I'd love to hear that. You can put that in the chat area, of course. And you know, whether you live in Florida, Texas, Montana, let me know, or let us know how you're doing with your prices there. But I can tell you prices have remained pretty consistently high throughout the country. And I would say we're probably still in a bubble situation. All right, so let me come out of here. All right, so here's the Dow Jones Industrial Average live. All right, these are live charts. So I've got the 60-minute chart over here. I've got a daily chart here and a weekly chart here. So this is considered a long-term chart. This is considered an intermediate term chart. And this one over here is considered a short-term chart. So I have the same symbol up. In this case, it's the Dow Jones Industrial Average across different time frames. So we can kind of get a good overall picture of what's going on in the market. And as you can see, we're moving up to the target zone here, but we probably are going to get that pullback. So we're probably not going to reach up there right away. We'll probably come down a little bit, work its way up. You know, markets zig and zag before they actually end their trends. So we're kind of, I would say at this particular point, we could get a small profit-taking pullback at any time, but it's definitely working its way up there. Kind of interesting. Now, the other thing I wanted to look at is the crypto market. And we'll just take a look at, you know, there's many different ways you can participate in the crypto market, but we'll just take a look at the ETF for simplicity. And, you know, we basically are very bullish. I'm very bullish on the crypto market. However, we're kind of experienced a little bit of a pullback, not a surprise. Okay, that profit-taking pullback. Looks like it may be trying to increase again, but I'm kind of thinking we may still see some movement down. We didn't quite hit the profit-taking target range here. So I'm thinking 33.8 to 27.79. We could still see prices come down a teeny bit. That's not a lot because we're at 38 right now. I do think the crypto market will recover and go much higher. And probably regardless of what the market does, I think cryptos are here to stay for a while. So again, we're bullish on this. We recommended a buy on this under the $10 mark. It's done extremely well, but I would stay with it. All right. The other one I like to go over to is Coinbase. This is another popular one. And again, the nice thing about these cryptos is right now they've given you an opportunity to get back in. So they pulled back after a big move up. And so now you have an opportunity to once again get in at these levels here. So I like the Coinbase. I think you could probably go into this at this point and be pretty happy by holding that. So Coinbase I'm liking. The last one I want to take a look at is Blockchain here. This is RIOT. And this one also too has pulled back. I kind of like Coinbase a little more than this one at this point. I still think we may come back down a little bit more on this. So Coinbase gets my vote for today. All right. The next market I want to take a look at is the oil market. This is a market that we're bullish on as well. And I'm going to open up the long-term chart here on this one. And my target on oil is 99, roughly to 125. We had a nice pullback here. It looks like this bottom's holding. We came up. We did not go below it, almost a double bottom. We went up, came back down, and now it looks like I'm thinking it probably should go ahead and start to move upward to this target zone. So that is a target zone. I think short term, we could get there probably by, I'd say, the end of this summer or maybe sooner, okay, at some point. So USO is going up, and this trade will do well as long as this bottom certainly holds right there. So bullish on USO. The other one I wanted to take a look at is TLT, and this is the bond market. And the bond market here, this is an ETF for the bond market. So the bond market here has been really, all right, in a downtrodden way. It did pick up a little bit, but some of our indicators are indicating that the bottom may not be quite in yet here. So it's looking a little bullish on some of the other shorter time frames, but long term, I'm probably not going to go into this because one of our indicators here called the PTF, which has a 75% accuracy rate, is basically saying this bottom is not the bottom. Now, that doesn't mean we can't get a correction and go up a little bit before it falters. But if this stays red, I don't want to take a buy and hold position here yet. So that's where I am on TLT. And then UNG, and Frank, this one's for you. UNG is starting maybe to base here. All right. We had a situation where we'd like to see it go above this red line here. All right. We may start to see a base here. We still got bearish owl on the 60 and the daily. So we kind of want to give that a little bit more time to prove itself. So we won't miss it. But at this particular point, I wouldn't jump into it quite yet. Not with the red owls at this point. So that's kind of where I'm at on that one there. Okay, so the next one to take a look at, I think would be good, is silver. Now, silver has been recommended by many, many people, especially a lot of YouTube influencers. And right now it's been pretty stagnant, okay? It's going pretty much sideways. So again, this is one I think you don't have to rush into it, But if it starts to break out to the top, then we'll start to take a look at it more seriously. But for right now, I mean, you can certainly see here, we've got kind of a channel with a resistance area right around in this area here. So, you know, it's been going back and forth for quite some time. I would wait for it to get above there before I get too excited about it. So silver, you know, we'll keep an eye on it. But I don't think you need to rush into that one. And then gold is the other one I want to take a look at today. And gold is one that should certainly have more highs. We're probably looking at gold to get up to around maybe by the time it's all done around 220 for a high. Short term, I think probably we're going to get a little pullback on gold at some point, but the PTF is green on the weekly chart, so we got some more highs coming on gold. So you could be long gold at this particular point. All right. So that's kind of what I wanted to cover today. Any thoughts? If you have a market you want me to look up, feel free to type it in. We've got a few more minutes. Otherwise, we'll go ahead and call it a day. All right, so my final summary for today then is, you know, interest rate's going to get announced today. That's the big announcement. I think probably they'll hold them flat. That's the way it's signaling now. Probably decrease them a little bit. Not much, but decrease them a little bit come this spring and summer. And markets should eventually be pretty strong, I think, until we get to that wave 5 target zone at some point later this year. And again, I'm predicting some type of profit-taking pullback in the markets overall pretty soon, okay? But nothing really to worry about. All right, Frank's got XOM, ExxonMobil. Take a look at that one. All right, so ExxonMobil we've looked at before. Looks like it's coming up for a retracement type of situation here. Not a super great chart, okay? It doesn't really, I'm going to take a look at the long-term aspect of this. It really has not corrected that much yet, Frank. Okay, we've had a little bit of a correction in here, but nothing. Let me just redo this here. So I'm thinking if we get a decent pullback on this one, it's probably going to pull back somewhere between 86.5 to 65. So I think it's kind of working its way down there. So after it works its way down there, then it will be a good buy again. Okay. And again, if you're holding this long term, just make sure your stop is low enough that you don't get stopped out on this pullback. Okay. All right. GS. Let's take a look at that one. Okay, so you're watching these. Okay, so this is the long-term chart, pulled back, kind of moving back up. So on this one here, let's just take a quick look at the pullback zone here. So you see it reached the target here, so that's a good sign. So it's probably heading back up. So I think you have more highs on this. I wouldn't be surprised if you take out this high at 420 pretty soon, okay? So that's looking pretty good. All right, and then LII, we'll do a couple more here. All right, that's bullish too. If you're long on here, that's fine. Otherwise, if you're thinking about going into this one, wait for the pullback, okay? You don't want to be chasing this market because it could pull back at any time. All right, Frank, PTBR. PTBR. It's loading. Nope, don't have data for that one, Frank. All right, let's see. CIVI. All right, let's take a look at this one. Burrito, let's see. Kind of a messy chart. a little bit very volatile. When you have a chart that is kind of messy like this, stop loss placement becomes quite difficult, right? So you might have to go longer time frames. Not enough history on this to get a good clear Elliott wave, though this is an impulsive wave of some degree here. All right, you got a red owl here, so probably pulling back a little bit right now. So if we had to guess on a target here for the pullback, I would say probably we're looking at 58.82 to 41. And that would be kind of a profit-taking pullback area, and then it should go back up. So I'm thinking it's coming down a little bit more right now, so probably not quite done yet. The lower time frames are still kind of bearish as well, so I would hold off on that one, okay? All right, very good. All right, so we're going to be back next week on YouTube, LinkedIn, and Facebook. So definitely join us here. And Alexander, on the stocks you want to look at, bring those to Stock Analysis Friday, okay? And we'll take a look at those. We want to kind of keep this session primarily for market forecasting and talking about some of the upcoming things. So I don't mind looking up some stocks, but not a laundry list. Not for today, but bring those on Friday. All right, everybody, have a good one, and we'll see you back here next week. Thanks so much.